Actually, there are lots of changes have been done on the NSE website.
Yes, sir.
So if you click on the home page, here you will see Nifty 50. You just
Okay,
click on this link
okay, sir.
and you will see all the information about Nifty 50 stock. So this
Okay.
is Nifty 50. This is the spot price. This is the indicative close.
You have seen that that heat map, no, sir,
Yes,
just
yes,
before.
exactly. That is also there. Okay. So this is the return, one week
Okay,
return, 1 month return, 3 month return, 6 month return, year
okay,
till date, and 1 year performance.
okay.
And this is the heat map. So Bajaj Auto is the leading gainer today, more than 5%. Then Nestle, Telecom, Tata
Yes,
Consumer, and HDFC and ICICI, one of the lead.
yes.
So you can see index mover upward and index mover downward. So
Yes.
ICICI Bank and HDFC Bank, both bank, both private, one of the
These are
leading
the
private bank.
highest
Yes,
weighted stocks, and even in Bank Nifty also would have fallen so
yes,
much.
yes, yes. And because Reliance is also falling, so three major
Yes, sir.
stock is falling. That's why Nifty is
Yes.
200
Even
point.
SBI also, sir.
Yes,
All five stocks are very high weighted stock
high
in
wattage,
Nifty 50.
exactly. They are the leading highest weightage in the and, and with the you can see out of 50, 39 stock are declined and only 11 are advanced. Okay?
Yes, sir.
But Bajaj Auto is doing well. You can see Bajaj Auto is more than 600 point positive today.
Even Shriram Finance is also doing good, sir. It is in very good position, sir.
Yes, yes. You
Shriram
can see
Finance.
yes, like Bajaj Auto. I was waiting for the reversal of this stock, but it doesn't get reversed.
Yes, sir.
I was thinking that if the stock is trying
Yeah,
to
it
fade,
should come to that level, sir.
yes, yes, then I'll do the selling. But there is no selling in this stock since morning. You can see I was trying to catch this level. If the stock fall from this level, then I'll go for a short, but it doesn't come down.
That red candle low should break, sir, or which one?
Yes,
When
yes,
will we go for short, sir?
yes,
Yeah, that red candle low should break.
yes. If the this candle low break, then I can go for a short entry, or you can see the 50% of this candle.
Ah, okay, sir.
Then I can
Okay.
try to go
Yes.
short because you have seen like a dark cloud cover candle. So if
Yes, dark purple.
yes, so any candle, if the seller are aggressive and more than 50% of this candle is covered by the downward
But here
direction,
dark cloud cover means it should open above close of first
yes,
green candle.
yes, yes, it can be possible. But in this case, you can see the high are matching. So it is
It
quite
can be with
possible.
the
Yeah,
top now, sir.
yes, yes, yeah, exactly. So because the high of both these candle are matching, I believe that market will not go up, but it
Yes,
has
sir.
not fall also.
Below that level.
Yes, you can see the stock has not crossed above this level and neither
Yes,
crossed
sir.
below this
Yes,
level.
sir. So
So it is in
in a
range
way,
bound.
like where the top is failed now
Yeah, you can
because
say.
of
Yeah,
so many days.
because the market goes sideways after this candle. It has not
Yes.
broken the low and it has not crossed the
So
high
it
as
has
well.
failed
Yes, you can
with the
see.
top.
Yes, it has failed this pattern. Okay. So for any further trade, this either the this candle should close above this high of this candle, or it should low the break of this low.
So now we can go for long now, sir. If this last green candle goes
Yes,
tomorrow open
yes, yes, yes.
above this.
If tomorrow it is possible, then we can think about it. But not even a 5 minute chart. You can see even on 5 minute chart, even on 1 minute chart, there is no sign of recovery. Okay. Now
Yes,
you can
sir.
see in the 1 minute chart, you can see the price is coming down, but there is no any kind of confirmation.
Exhaustion is there, sir.
Yes,
So much of exhaustion.
yes. Still, you can see this is a green candle here.
Yes,
Okay.
sir.
So today we will learn about another strategy, that is long combo. So long combo is also a bullish strategy. Okay. So when we are bullish with the market only then we should have to make this strategy. This strategy is also including two different
Yes, sir.
strategy involved. Okay, so this time we are doing the hedging with options contract only. Last time we
Okay.
have done the hedging with the stock, we have done the hedging with the
Yes,
future
sir.
contract. Now we are doing the hedging with another option contract. So in this long combo strategy, what we will do, if you are bullish with the market, what you have to do, you have to buy a OTM call option.
Sir.
Okay, you need to buy a OTM call option, and at the same time you need to sell a put option, and this put option should also be OTM, out of money. So we are
Sir, how
buying,
much delta we can short buy and sell this option, sir?
we will check a bit later on. Okay, so in this strategy we need to see where right now market is there, and we have to choose. For example, in this example you can see the stock is trading at 450.
Sir.
So stock is trading around 450, so we are choosing a strike price of 400. Okay, so we assume that market should not go below 50 point, and we have purchased a call option of 50 point plus. Okay, so we have choose the call option of 500 strike price, and at the same time we have sold a put option of 400, because we don't believe that the market should go below 400 level.
Yes.
So 50 point plus with the spot price and 50 point minus from the spot price, we have choose two strike prices. Now in this case you can see stock is trading around 450. We have sell the put option of 50 point down, 400 strike price, and we have buy the call option of 500 strike price. Again there is a gap of 50 point in both. Okay, by selling the put option we have received the premium of 1 pint or 1 rupee. Okay, and we have purchased a call option and pay 2 rupees. So we have paid 2 rupees and receive 1 rupee. Okay, so 2 minus 1 equal to 1. The total net paid amount is only 1 rupee. Okay, now what will happen, because we have choose the call option of 500 and we have paid the premium of 1 rupees, my break even point would be 501. So if the stock price move above 500, then I will make unlimited profit after 501. If the stock price move above 501 on expiry, then I will start making the profit. So however the stock will go in the upward direction, my profit can be unlimited. Okay, now in that case, if the price is ranging between, now you can see this is the payoff table. Okay, so we have choose the strike price of 500 for the call option, for the call option. Okay, and 400 for the put option. So in the, if the stock price is going upward direction, okay, so we have received 1 rupee. Okay, so is the stock price is moving upward. Okay, so we will make profit in the call option. Okay, and here the intrinsic value will be 50 point, 50 point plus we have paid the premium of 2 rupees. So 50 minus 2 equal to 48 plus 1 equal to 49. Here the intrinsic value would be 100. 100 minus 2 equal to 98. 98 plus 1 point received from selling put, it would be 99. Here would be 150 minus 2 equal to 148 plus 1 equal to 149. And here would be 200 minus 2 plus 1 equal to 199. So you can see if the market is going in the upward direction, we are making unlimited profit. Okay, if the stock price is in the range, in your particular range, because we have purchased the call option of 500, in this case what will happen, I have paid the premium of 2 rupees and I received the premium of 1 rupee, so my loss would be 1 point only. Okay, if the price is again 400 around, so again my loss would be only 1 point. And if the stock price is 1, again you can see my loss is limited to the premium. Now if the stock price going below your put, we have sell the put option of 400. Now the stock price is coming down. So we have received 2 point. We have paid the 2 point here. So 2 point would be my loss, and the intrinsic value of the this put option would be 50 point. We have received the premium of 1 rupee. 50 minus 1 equal to minus 49. So here would be 49 point loss in the put option as well, and 2 rupee loss in the call option as well. So total loss would be 51. Now my loss is unlimited. Okay. So whatever the market is going downward, because we have only hedge up to 2 point only. So first of all, you need to be bullish about the stock. Only then you should have to make this strategy. If you are bearish about that, you cannot use this strategy. Okay. So in this case, we can make unlimited profit and unlimited loss. Okay. So first of all, you need to be bullish about the stock. For example, if I choose the same stock, we are choosing like we can go for Bajaj Auto as well. Okay. And we can choose any stock which is bullish today. So now coming to Excel. Okay. Now we are using long combo strategy. Long combo include buy, OTM call, and sell, OTM put. Okay. So buying and selling OTM put option. Okay. This time we can choose any stock which is bullish today. So you can choose Bajaj Auto as well. You can choose Nestle, Tata Chemical, Eternal as well, and Power Grid. So we can choose Nestle. Okay. We can try with Nestle. Nestle stock is also 40 point plus today. Okay. So in the morning, the previous close were 1451 and it is open around 1461. Okay. So we can consider the open price. Spot price in the morning was 1460. Okay. So what we can do, we can again make a strategy of 50 point plus and 50 point minus. Okay. So we are going to option chain and choosing Nestle. Nestle. Now, if you see like 1460, okay. So 50 point or 40 point would be enough. Like 1500 key call I am choosing. Okay. And 1440, 1420 key put I am choosing. Okay. So 1500 key call I am buying the strike price of 1500, and at the same time 1420 strike price. Okay. So in the morning, if you see the open price, we can consider the open price in the morning. The open price was 17 and LTP is 21. So if you buy in the morning, the open price was 17 and right now it is trading around 21. We can make a profit of 4 point. Okay. And sell the OTM put option. So because we have sell the put option, 1420. Okay. Now open price was 15.45. Okay. We can consider 50, not a problem. Okay. And LTP is 2.35. We can make it 3, not a problem. Okay. So we have sold the OTM put option and intrinsic value is right now 12 point. We are making a profit of 12 point in the put option and 4 point in the call option. Okay. and total would be 16 point profit. Okay. Now lot size of Nestle is 500. Okay. So total premium which you have paid is 17 multiplied by 500. Okay. And we have sold this option. So again, this one multiplied by 15. Okay. But because we are selling this option, so we need to pay high premium. Okay. And actual value of this right now is 21 multiplied by the lot size is now 10,000. And here you can see 3 multiplied by 5. Okay. So this is the difference. This one minus this one, and so total 2,000 profit in the call and 6,000 profit in the put as well. Okay. 16 pint total equal to 8,000 would be your profit. Okay. So we have to choose these kind of stock. Okay. Now in this case we have buy the call option. Okay. And pay the premium of 17 rupees, and we have received the premium of 15 rupees. So net pay amount is only 2 pint. 17 minus 15 equal to 2. We have paid only 2 pint. Okay. And here choose the call option of 1500. So if the break even point would be 1500 plus 2 equal to 1500, it would be 150. Okay. So this is your break even point. Okay. So if the market goes above your break even point, you could have make lots of profit. Okay. So this is the intraday scenario. But if you want, you can still, if you are still bullish with the stock, then you have to check the Nestle stock, Nestle India. Then again to choose the daily chart. So you can see there is a large bullish candle here, a green Marubozu type of candle. Okay, and now you can see it has reached up to the resistance level. Okay, so we should make an exit now. What will happen tomorrow? We will see in the tomorrow session. Okay, you can see it is reach up to that level. So if this particular level is break, then we can consider there is a rounding pattern here. So
Yes, sir.
okay, so if you can see there is a breakout of this particular candle, if any candle break with a high volume, then we can predict that market can go more. We can do this is my range 136 point, so 50% would be, it can come up to 1570 or 5080. Okay, so first target would be 50% of this gap, and second target would be 100%. So you can see it can come up to this level. If you can see there is a breakout candle, any daily candle which high volume. Okay, we can see like what are the MACD is saying. Okay, so you can see MACD is also giving you a signal. Okay, and
RSI, sir.
yes, we can apply RSI as well. So RSI is also still not overbought, so it is around 64. Okay,
64. Then it should be breaking out.
yes. So if uh, tomorrow session, if the market remain positive for any reason, okay, and we can see if there is a high volume in the breakout candle, then we can consider the stock will go upward direction in the upcoming session.
So much of volume exhaustion is there, sir, from so
Yes,
many days.
exactly. And
Contraction.
we have in the next week we have the monthly expiry as well. So it may possible in the upcoming expiry we can see this stock can give some good rewards. Okay, so so first of all there should be a breakout candle with the high volume. Okay, and tomorrow candle should give a close above this. Only then we can consider if the tomorrow candle close above this level or above close 1500, then we can consider that market can make a so this stock can make a new high or it can reach up to this level or 168. Okay, now what will happen, we have seen like different kind of scenario. Okay, so we can make a payoff table. Okay, so in case of so we have choose the OTM option of 1500. Okay, so call payoff.
Sir, in choosing the strike prices, we have to see almost premiums are equal on both sides.
Yes, close
Like
to the
we
equivalence.
like that, we have to choose the strike prices of put and call, sir.
Yes. In this
Almost
case, we
the
have choose the selector. There is a difference of 50 point each. Okay.
yes, sir.
So there is a gap of 50 point. You can choose a gap of 40 point, 30 point, 20 point. It's all up to your choice. Okay.
Okay.
Now you can see in the call payoff. For example, in this case, he for selling the put option. Okay. So if the market remain at 1500, you can make a profit of 15 point here, and we have paid the premium of 17
Yes.
rupees for this. Okay, so we have paid this one and received this one. Okay, so we can choose minus 17 here. Okay, now so we have paid this one and we have received this one. Okay, if the stock expire, if the expiry uh, goes on this particular level, so we have to bear a loss of 2 point only. Okay,
Yes.
so minus 2 would be my loss. Okay, and 1502 is my break even point. Okay, that is my break even point. Okay, now if the stock reach at 1510, 1520, 15, 30, 1540, and 1550. Okay, so on reaching here the intrinsic value would be 10 point, here would be the intrinsic value 20 point, here would be the intrinsic value 30 point, then 40 point, and the 50 point. Okay, now we can add another column. Okay, so we have paid 17 rupees here. 17 minus 10 equal to minus 7. Okay, 20 minus 7 equal to
Right.
13 plus. Okay, 30 minus 17. Oops, just wait. Oh, here would be minus 3. Sorry, plus 3. Here would be plus
There it
13,
is 13, 30.
23, and 33. So we are receiving the premium here, and here the 15 point will remain same. Sorry. So if the stock price is coming, we will receive 15 point from this. The total would be 35 plus 15 would be 48,
15, 48.
38, 28, 18, 15 minus 7 equal to 8. Okay, so this would be my profit 8 point, 18 point, 28 point, 38 point, 48 point multiplied by the lot size. Lot size is 500. Okay, Okay. Okay. This can be your profit if the market goes in your direction. Okay. Now, in case the market is against your direction, and it may possible market can come up to 1490, 1480, 1470, 1460, and 1450. Okay. So in this case, again, we have paid a premium of 17 point, so there would be a loss of 17 point. Okay. So my loss will remain the same in this case. Okay. And we have sold the call option of 40-20.
Put option.
Okay. So 40-20 tak I am safe. Okay. 1430, 1420, 1410, and 1400. Again, this will remain the same. Now, in this case, we have received a premium of 15 point. Okay. So, if the expiry goes at 1490, still I'll make a profit of 15 point from selling the put off, because we have choose the strike price of
Put.
40-20. Okay. So, till 40-20, I'll get a profit of 50 point, 15 point, 15, 15, 15, 15, 15, 15, and 15 here as well. Okay. So, here my loss would be only 2 point only. We have paid 17 rupees and received the 15 point. Okay. So in this case, my maximum loss can be the premium paid and the premium I received. Okay. Now in this case, if the price goes up to this level, okay, so intrinsic value would be 10 point. Okay. And I receive the premium of 15 point. Okay. So 15 minus 10 equal to 5. Okay. And 17 minus 5 equal to minus 12. This would be my loss. Okay. Now, in this case, the intrinsic value would be 20 pint, and I have received a premium of 15 pint.
15.
So, 15 minus 20 equal to, again, this one.
Minus 5.
In this case, you can see the
10.
intrinsic value would be 10 pint and receive the 15 pint. The 10 minus 5 equal to, okay, 10 minus, sorry, just wait,
10 minus 10, sir.
here,
So it should be 5 rupees profit. Here 5 rupees loss.
yes, exactly. Here would be the loss of 5 point. Okay, so 17 plus 5 equal to minus 22, right?
Okay.
Now, if the market now going further down, now you have to bear the unlimited loss in the
Yes, sir.
put
17.
option as well. Okay, so here
Here
would be the,
40 minus
now in this case, there would be the loss.
40 minus 40.
Now
40, sir.
it would be like total
40
15 point.
minus 15, 25. 25 plus 17, 42 rupees loss, sir.
Yes.
42 rupees, sir.
No
40
42.
minus 15.
No. It would be 32 point only.
32 points, sir.
Okay. In this case,
13, 8,
yes,
42, sir.
yes. Now it would be,
Here it is 25.
yes. Now it will be 42. So we can see we have a wide range up to this level. We are having the only the loss of 2 point only. So if the
Yes.
price is coming down as well, we are having the only 2 point loss. Okay. So
Yes.
we have a range. Okay. If the price remain in this region, still we have a very limited loss. Okay. And if the price is going beyond my strike price I have chosen, then I have a unlimited loss option. So what I can do, if the price is going against my direction, I can modify or I can exit my trade. Okay. So here you can see key at this level I can either square off my position because I don't want to bear further loss. Okay, and if the stock is going in upward direction, I can make unlimited profit, no doubt. Okay, and while reaching this particular point, we can do some kind of adjustment as well. Okay, so if the stock price is coming down, down, down again, so we can adjust in the strategy. Okay, we can do lots of things, like we can choose another strike price, we can square off this position, we can sell another put option of the lower strike price. Okay, and we
Sir,
receive
one
the
doubt,
premium.
sir. If the price is coming down in between the month,
Okay.
not nearing the expiry, if it is coming in between the second week or third week, second week, then the premium will be very high, no, sir, because already it would have been coming down.
Yes, yes,
1420 put option premium will be very high. So how do we adjust and take another strike price, sir? How do we adjust
so first of all, there are
if
main
it is?
things that you need to be bullish about this strategy. Okay,
Yes, sir.
so if you are not bullish or the stock is coming down, we should have to make some kind of adjustment in the early phase as well.
Okay.
Okay,
Okay.
second thing is that we have a protection up to this level. Okay,
Yes, sir.
so we have paid the premium in this as well, and we receive the premium of this. Okay, so if you
Yes,
believe that the market is volatile and we can expect a recovery up to the expiry, we can hold the position, or if you want, you can square up the position and take the minimum loss you are having. So whatever the
okay.
value of the premium would be at that particular time. Okay, so you have to check only at, so we can see matlab we can do any kind of stock which is bearish, then we have to test this strategy, only then we'll come to
Okay.
the exact.
Okay.
Okay, so in case of bullishness, we can see this can be your maximum profit and loss if you hold
Yes,
this
sir.
stock up to expiry. And if you
So
want,
by
you can do.
checking the chart and technical analysis
Yes, exactly.
and our price action, we can exit in early phase.
Yes, yes, yes. Okay. So just I have told you, if you want, you can use same strategy for intraday as well. Okay.
Yes.
In intraday, you have to choose the stock which are positive today
Top
or bullish
losers
today.
and then
Okay. So same strategy, you can choose any stock, like you can choose Bajaj Auto as well. Okay. So first of all, you need to check. Now you can see this stock has also given a breakout with a high volume.
yes, sir.
So this was my previous resistance, and we can see the high volume breakout. Okay,
Yes,
now if you analyze this stock on the 15-minute time frame, okay, you can see there is a gap up in the stock.
upper box.
The stock opened with a gap up. There is a gap up in the price, and this is my first candle. Okay, and we can plan an entry after this.
Sir, can you just go back to daily time frame? So,
Daily time frame. Okay.
daily time. You marked that resistance now, sir.
Yes.
Already two times resistance, three times.
Now you can
Yes,
see
sir.
it was a
Yes,
previous resistance.
yes, sir.
You can see.
So second time resistance, it went up now, sir.
Yes.
With
Okay, we can see this is the first time when the stock see a rejection level. It has rejected from this particular level. After that, another green candle, and after that, you can see there is a fall in the stock. Okay, so you
now
can
it
see,
it can be triple top now, sir. Triple
you can see there
bottom
is
now.
a double top kind of pattern.
Yes, sir. Double top, and it is a triple top
Yes,
also now, sir.
yes, here, here, here. Okay,
And there.
it is fall from this region, and now it has crossed this
And
resistance.
it can also be triple top, sir, because
Triple top,
there may be a,
if the stock coming back from this, then
yeah,
we can
tomorrow if
consider.
it comes
Yes,
down, that it can be triple
yes,
top.
we can say.
Most probably it will be
But
triple top.
you cannot say it's a triple top because it has already crossed this level, and there is a gap between. There is a nice gap between
Yes, sir.
these two prices. Okay, so
Yeah.
that gap should not there should not be much difference in this particular
Understand.
uh,
Yes, sir.
region. Okay, now we can consider this as a double top, but we cannot consider this as a triple top.
This
Okay,
is triple top. Yes.
yes. Now, as I have told you, we can consider this is a rounding pattern.
Sir.
Okay, you can see there is a rounding pattern here, and again you can choose this as well, and you can use this part as well. Okay, so in this part you can see the stop was coming down,
Yes, sir.
and in the second phrase you can see here the stop was coming down, and after this region it was going in the
Going
upward
high.
direction. Okay, so and you can see there is a breakout candle here as well with the high volume, and
This is rounding
but
bottom.
only thing is that we have seen the RSI is overbought region. Okay,
Overbought.
it is already overbought. It
Entering
is
into the
above.
overbought one.
Okay, but it
But
can
still there will be a chance
yeah still there is
for
a chance that it can go upward direction. Okay, so it can be more overbought. It can be it can reach up to 80 as well,
80,
until or
80
unless we can
from
see there is a
80.
reversal sign in this particular
Yes,
RSI. If the RSI is moving in this way, then we can consider a short position. Otherwise, it can reach up to 80 as well. Okay.
yes,
Now, now if you check this on the weekly chart as well, there is a resistance area. You can see it was by a previous
previous order block.
order block here. So it can reach up to this level
Yes,
to get the liquidity.
yes,
Okay, and same thing if you go for the monthly chart as well. So again, you can see. So there are chances it can reach up to this level. 12,000 can be. Maybe or may not be in the upcoming days, or it can come in the next expiry as well. Now you can see on the monthly
yes,
chart as well, the stock is not overbought yet. Okay, and you can see it has reached up to 90 level as well in the
yes,
previous time. So we cannot consider this value as an overbought. And again, if you see on the weekly basis as well, the stock has not reached up to a overbought region. Okay, and there is no any kind of sign of divergence. There is no divergence. Stock is
yes,
showing the conversion, not the diversion. Both things suggesting the stock
there,
in the upward direction.
yes,
Okay, and on the daily chart as well. Okay. So there is no negative sign we can see in this stock. So hopefully,
yes,
if the market will remain positive, then it may possible the stock will also make new high. Okay. So
yes,
we have to choose these kind of stock. So first of all the stock which are
okay,
bullish today, we have to choose for the intraday purpose. Okay, and
yes,
so we can choose any of the stock which is bullish today. We can choose like from here as well, top gainer and top loser.
okay. Or we
Lagato is there,
can go for
Eternal is there, ONGC is there, NTPC is there, Titan is there.
open interest, like
Okay, so these stock are
in
positive.
terms of open interest also we can choose,
Yes.
sir.
Now we can see one of the
Long term.
example if the of the bearish stock, if the stock goes against your direction, what can be possible? So for example, this stock is 190 down today. So if you are an
190.
intraday player, okay, first of all, okay, you can see this is your daily chart, and if I go to 15-minute time frame, okay, now you can see this is
Yeah,
a gap down.
yeah, so
Okay, you can see the stock is coming down. So if the stock is coming down, there is a gap down in this particular stock, and the first candle is also bearish. Would you go for this particular strategy today?
no, sir,
No, na. Obviously, so if the stock is not going in your favor,
because it was
how can you
almost
apply this strategy? This is not
No, sir.
this is not favorable strategy for your trading. Okay. So
Yes,
first
sir.
of all, while making the strategy, we have to see the chart first. If the stock is bullish, only then we can consider this long combo strategy. Okay. So if the stock is
But
negative or
with
bearish, we should
yes,
not go for that. We should choose another strategy. There are lots of other strategy. We can go for
yes,
synthetic put. We can go for other strategy as well. We can write the
yes, sir.
uh, call option. Okay, and
Yes,
sell
sir.
the future. So we can do synthetic wali. We can do short. You can write the call. We can
Protective put
buy
we
the
can do, sir.
yes. Yes. Okay.
Protective put we can do, no, sir.
Yes, we can do that. Okay.
Because
So this kind of strategy should not be used for bearish stock. First of all, your stock should be bullish. Okay.
yes,
So
sir. Okay.
this is the
Sir, I want to ask you one thing, sir.
okay.
Sir, I have seen in your Instagram there is one book which is been written by you, Harmonic Patterns You Should Know.
Yes, yes,
That book is available, sir. And what is the content of the book, sir? Do we also know where the PRZ come potential reversal zones,
yes,
how
yes,
to
yes,
trade?
yes.
Because the D point will be we will get a range from one ratio to another ratio, but we will get a PRZ zone according to the XA ratio, right, sir?
Right, right.
XD ratio, XD ratio, whatever it is specified there.
Yes,
That
yes.
will be the potential reversal zone.
Right.
All these things will be there, sir, in that book.
Yes, yes.
Can you just send me the link, sir? I tried to buy that book, but it is not possible.
Okay, okay. I will share the link. Okay.
How much will be the price of the book, sir? I have seen in Flipkart and not in.
I will send you the link. Okay.
Okay, sir.